Jamie, happy Monday to you guys.
Indeed, happy Monday to everyone in attendance, and what an interesting day it turned out to be. We'll get into the details here shortly, but hey, the month of June is almost behind us. Today's June 25th, 2018, and here we are at another Office Hours Monday. So I tell you what, before we get rolling here, just something to make the attorneys breathe a little easier here. Just want to make sure that everybody in attendance, whether it's this webinar or any of the other webinars that we do throughout the week, we provide this content for you guys strictly for educational purposes only. If you do need investment advice, what to buy, when to do it, when to sell it, all that good stuff, please seek out a registered investment advisor or some other licensed individual that can help you out with that type of stuff. Before we get going here into the content for today, just want to take a brief moment to let the new people know a little bit about the community that we fostered around the technology here. We've got a lot of things going on a weekly basis. Kind of all starts off with Barry's Trading Room, which you see up there in the upper left, moderated by Barry himself. Opens the room up 30 minutes before the market every day, and quite the group of traders in there. Barry does a very good job showcasing the technology and walking people through his trades as he makes them in real time.
I believe he's back on the 27th in the chair.
Right. By the way, side note, asterisk, Barry has been on a well-deserved vacation. So that's where he's been as of late, but hopefully he's back soon.
The 27th, Wednesday, he'll be back in the chair.
Right on. Okay. Of course, today's Monday with myself and Steve. We get Steve taking the helm on Tuesdays for the trade of the week. Andy rides shotgun with him. And of course, as always, we change it up just a little bit. You get to hear from the CEO and founder, Dan Merkin, along with our CTO, Brad Williams. Always an interesting webinar with those two. Of course, Andy's going to round out the 5 p.m. Eastern webinars on Thursday with the Trading Studio, and I ride shotgun with him. And then something completely different on Fridays, where we host from the hours of 8 a.m. Pacific Standard Time to 11 to 2 p.m. Eastern, a 2 to 3 hour webinar depending on the crowd that arrives that day. Usually been pretty good. Had to fight the crowd last Friday, but that's just pretty much anything trade ideas related, with the exception of some really advanced stuff like Brokerage Plus. But almost everything else is addressable not only by myself, but you've got myself, Steve, Andy, and Sean all in there. So you got 4 heads working on the questions that you ask in there typically. So a great place to spend some time on Friday for anything TI related. Now, in addition to our 5 o'clock Eastern webinars, we have recently added the TI University slew of webinars here. Everything from beginners, which is on Monday, stretching all the way out to Thursday. So we have 101, 201, 301, Monday, Tuesday, Wednesday, Thursday, respectively. I just happen to teach the Thursday 401s. So if you're into advanced backtesting and things of that nature, then Thursday's your day. Highly recommended that you take all of these if you're a new person. That way, this one's going to prepare you for 201, so forth and so on. But you can't go wrong there. One more thing here, just always like to show how our user base has increased since we added our AI module. Initially, we had Holly, born in the very beginning of 2016. Recently, we've added a couple of additional AIs, so now we have 3 times the AIs. We'll get into the details, check out what each AI did today shortly here. And of course, today's activity in the market ties in perfectly with the ebook that myself, Andy, Sean, and Steve put out not too long ago. And when I say not too long ago, I'm talking about pretty much right up in this area here before we had the major peel-off of the markets. Just got a little lucky here with the release of the book. But backing up to it, it's free to download. All you have to do is go to this address right here and download it. And it's a perfect, all these techniques. Well, I'll showcase the techniques that I contributed to the book. It's basically just right out of the book, the things we're going to talk about today on some of the trades that could have easily been identified through some of the alert windows that I'll showcase here. All right, so onward through the fog. I guess it's that time, Steve. Time for you to take
Sure,
the
send it over.
show
While
us.
you're doing that, so go ahead and send it over.
Mhm.
You made a funny reference. You said, and now for something completely different. And of course, Monty Python fans, all I could do was picture a guy at an organ wearing nothing but cufflinks turning around smiling at me. That image, and anybody else over 50 that might have that about what happened today, because it was significant. In the S&P 500 spiders here we're looking at, I was back up that one day on a red candle. So, I mean, I was really neutral, but maybe even a bit more bullish last week as we were digging in. Right here, I'm highlighting this orange line to you guys as the pivot line of the S&P. We were digging in onto that line, using that line as support, which is textbook prior resistance becomes future support, which is textbook pivot line action. Well, over the weekend, we broke down this morning, gapped down through that level, traded in that no man's land level, and then fought like crazy to actually recover that level. We didn't quite recover that level, and I'll tell you what else we didn't quite recover. That blue line right there is the 50-day moving average. I thought for sure, I was talking on the back channel with the trader guys, this market's probably going to want to bounce. The spider's going to try and capture its 50-day, and the Dow and the diamonds are going to try and capture its 200-day. I'll get to that in a moment. But we had a very ugly candle giving back a lot of price where a base camp was trying to be built back here at the level of pivot, which would have made sense. But now we don't have a lot of sense to be made because we gapped down through it and even closed actually below that orange line as well. That orange line and that 50 period were very, very crucial. Now, I'm not going to just, spin the hat around and say start buying, options, protection. We're not there yet because we did have a nice close. The buyers came back in and put a nice bottoming tail wick. It could have been a lot worse if we had closed on all red candles, but we didn't. We bounced back up. And for now, I'm going to give it the benefit of the doubt and say, all right, close enough for government work, but I'm watching you. All right, the 50-day moving average and this orange pivot line. The pivot line goes back to where the support was back here of this prior range. So it's funny, I didn't delete these lines. They just kind of came right back into play again because they remain in play. If we zoom out, this line up here was going to be the next highest level before we got back to all-time highs, which again is way back here. So a little bit of damage done today in the spiders. The good news is, on the good side, again, the Dow, the bottoming tail came in at the end of the day and gave us a nice bottoming tail. Looking back on this bottoming tail, we got a nice gap up the following day and moved higher. Looking at this bottoming tail back here, we had a nice trade higher the following day. And this one down here, we also had a bottoming tail and went a little bit higher. Hang on a second. Okay, let's go to the Qs. All right, same thing happening over in the Qs. And again, I say the same thing, meaning that orange pivot line was in play after talking about a lot of activity up here, trying to push higher to new all-time highs. Well, price action also gapped down in the technology index, but at the end of the day, we closed above this pivot line, which was resistance from back here. So could have been worse, could have been worse. And as you see, the blue line 50 period is not touched. So the Qs, NASDAQ, are relatively holding up okay in tech land. What's not holding up okay, let's go right to it, is the Dow. All right, I just saw something, a little blurb that said the Dow today closed, being the operative word, closed below the 200-day moving average for the first time in 2 years. We can see back here, we wicked and shot and closed above, wick and shot and closed above. But today, a little bit of a wick, but lackluster close that happens to be below the 200-day moving average. So, again, we could say close, we'll keep an eye on you, but that's going to light off a lot of warning lights tonight in managed money land, I guarantee you. So I don't know what tomorrow's going to bring. I mean, typically after these sell-offs and a nice big spike down and a buying of the close, sometimes we can get a gap up for no good reason. The market closed stronger on some sort of news chattering out there, global trade type stuff, which has kind of been what the markets have been looking for. But damage was kind of done, but we'll see if we can recover. Good news is it's still a higher low in the Dow, still a higher low in the S&P, and still obviously a higher low in the Qs. Now, we talked a lot about the IWM leading this market higher. Just 3 or 4 days ago, we were in all-time high land for the Russell 2000 small cap index. But I said, if this thing wanted to put in a pullback, the first level I'm going to be looking at is going to be that first level that was already drawn for us. That orange line was already in there. That's the level that we broke through to the upside after 3 days of congestion here. And then, of course, we returned to that. It took 15 days to get up, but only 3 days to come back down. And that line was already there. Again, I didn't draw that line today. It's just another great example of the pivot. Prior resistance can become future support. And intraday, that's right where the IWM decided to go ahead and bounce. So I found that curious as well. What I'm going to be watching tomorrow for some cues are actually European stuff. Back to the EWI, this is the Italy ETF, and these are going to be measuring, you know, credit default swaps and junk bonds, and how scared are the investors in Italy for holding Italy paper. They're going to have to continue to raise the interest rates to get people's attention. But more curious is, you know, Deutsche Bank, giant derivative European bank. It's just banging on the support level here. It's kind of looking for a reason to go down. The European markets are going to get a head start on us tomorrow. So I think that's going to be the order of the day tomorrow, is to wake up and start typing in Deutsche Bank and Credit Suisse and ING and seeing what these things look like. Because if the European banks break down their respective support lines here, it's going to bleed over into our markets. And our markets, quite honestly, are kind of just looking for an opinion to sell off, or at least they have been. So we'll see what happens, but ideally for the bulls, they needed to really hold this 274 level, and they lost it. We'll see what tomorrow brings, but definitely a shot across the bow in the technical analysis of the markets here. Jamie?
Good stuff, Steve. The IWM, that perfect example of up on the staircase, down on the elevator.
Exactly. Yep.
The way we do it. All right, let me grab it back.
Sure.
Here. Eyes back on, and we will continue.
I see it.
All right, hold on. Be nice to me, go to a meeting. Okay. Here we go, ladies and gents. Okay, so we are looking at what I had on my compare count windows 15 minutes after the open. So the one up top here is all the SPY components and whether they were hitting highs and lows with accelerated volume. And you can see 64% in the SPY components that were exhibiting higher than normal volume on the open. We've always got really high volume on the open, so you know we have to take it up a notch. And typically, I like to stick to the right around a little over 3 times the average 1 minute level. So SPY components 64, but in the overall markets, anything capitalized over 4 billion, I mean, we're looking at a huge bias here of 72% on anything over 4 billion market cap exhibiting accelerated selling in the first 15 minutes today. So let's take a peek. All right, here we are looking at 5-minute candles on the SPY. So 5, 10, 15. I don't know if you can see the yellow arrow there, but the third candle right here. So we get these readings right here. And look how fortuitous that could have been, placing a short sell here or using it as a gauge for downside momentum type short plays. All right, get the readings here. This is what we did the rest of the day. Not that I have to point it out to you, but everybody had a front row seat. So the compare count readings today were very advantageous. You know, I always like to say, don't like to see a big stretched out period in the first 15 minutes, and we had a little bit of a range here in the second 5-minute period, but you know, nothing that I would consider a really wide bar. If we looked at the 15s, let's just go ahead and flip it over to take a look at the end of that first 15-minute candle. So once again, not a small bar, not a big bar, just kind of right in between, little Goldilocks bar, and then the rest of the day is history. So as far as gearing up for expectations, boy, these guys really helped me get my head on straight this morning after seeing what there was, pretty significant. So on to the 3 hollies. Let's see here. Let's just get back to my cheat sheet here. All right, we're going to take a look at some of the risk-on examples today. Now, the thing about Holly and why I have to really tip my hat to her today is not a lot of opportunity that she saw, but boy, the things that she did see we could say that she was very, very selective today. Now, I can't really remember the last time, oops, I just flipped my layout, but you know what, that's okay. Here we are looking at the first Holly, risk on versus risk off, 221 versus $1.19 on risk off. Let's go ahead and flip it around here. What I was going to say before I accidentally flipped to the Holly layout is that we did have some duplication of the GDAC, or excuse me, the CADC and the GTHX today in both Holly 1 and 2. Only difference is that this one tacked on the PKE, whereas Holly AI, I believe, was just limited to the 2 here. Let these load back up. Oh, no, it looks like we got it on both. So Holly, oh, that's Holly 2.0. Give me 1 second here. Did Holly 2.0 have the same thing? Had one long, okay, so that was the difference. Holly 1.0 had the additional short. Holly 2.0 had the, well, actually, this is really weird because I'm looking at the original Holly here. Okay, there we go. So reverse that, all right? Same 2 short trades, one had a long, one had a short, and then Neo coming in today with 5 trades, 3 shorts, 2 longs, but not really knocking the cover off the ball today. Risk on 1 cent, risk off 76 cents. So kind of threw myself for a little loop there. Let me get back to my today's layout. And since we do have a limited number of trades to view from Holly today, this shouldn't take that long at all, but it is a beautiful example of risk on. So the first trade that we're going to look at here, and why we're all having a nice smile about this trade today, is its CADC. Now, of course, a beautiful short today triggered right up here, and these are 5-minute candles. But look what Holly did Friday. She bought CADC, had a huge potential risk on multiple there and a profit target hit. And guess what? Shorted the stock today, and we got a target hit and a nice little spread between risk off and risk on showing itself here. So here we have Holly getting short at the blue line and not even throwing a curve whatsoever once the entry was made here. Didn't even act like it was going to encroach on the stop loss here. And we can see the shaded area right here. Holly getting out of the trade as her profit target was hit. And we can see her locking in that dollar profit target right there. Now, of course, with risk on, what do we do? When we see Holly exiting a trade, we can do one of 2 things. We can size up the chart ourselves. And if we see, you know, at this point right here, hitting these these 5-minute lows here as Holly is getting out, well, wouldn't have been too hard of a stretch to keep a little on the table and adjust our stop loss back to break even. So if you're new out there, those of you who attend on the regulars, I've heard me say this time and time again, best way to get used to this type of interaction with the AI is to do a little bit of both, right? Approach risk off and risk on a trade-by-trade basis. So we see Holly getting out her position right here. We can peel out of half of ours, keep the other half for hopefully a little bit bigger of a move, which in this case, 45% additional move was on the table. So had we done that, had we peeled out of 100 with Holly, kept another 100, assuming we were in 200, set our stop loss for break even, would have stayed in this trade for the remainder of the day and had plenty of time to exit for an additional profit. So just a beautiful example of a risk on trade. I really like the fact that Holly kept it low as far as the trade count today, and the fact that all the money, pretty much all the money today in her stable was pretty much short. Now GTHX, another very good example of going risk on. So here we have her getting short here. Right here at the blue line, 48.71, we get a little downturn in the money and then pop back up to the entry line. This is not uncommon. This is not uncharacteristic. A lot of the times we see some of these plays hug the line before they really release, passing through back and forth through that line, sometimes 2 times, and in this case, many more than 2 times. Many times it passed, ebbed and flowed right around the entry line. Now keep in mind, never really threw us a big curveball, never was really in fear of getting stopped out. Now this one would have been a little bit more difficult to manage, assuming you were using a stop loss of break even on the second lot. But, you know, pretty big difference here between 18 cents and a potential of 82 cents. So once again, Holly plugs out right here because that's what she's programmed to do. This was a timed exit. Downward dog is programmed around a hold time, intraday hold time of 60 minutes. So we talk about this all the time as well. The strong suit, Holly's strong suit. What is her superpower? Bringing us statistically weighted entries. A lot of the times, because we read charts, unlike she reads charts, she reads them, but in a much different way than we humans perceive them. So a lot of the times we can read the intraday chart, identify a low risk area, and stay in that trade and try to milk a little bit more out of it. So here we have Holly getting out. We could have played the same game. We get out of some with Holly. I'm going to keep that other half. Now, if it's hovering right around the entry line, obviously, probably need to be a little bit more generous with our stop loss. So always think of it in this way. If it's already gyrated back up to that entry line, doesn't make sense to use that as a stop loss. So stick to our hard stop, right? Sometimes you can stick to your hard stop. If it's well below like this one, well then you might want to be a little bit more conservative and protect that first lot since it's so far away from the entry line. But in this case, had we given it, you know, maybe just tried to establish a little bit of a pivot level up there and go, okay, well, whether we stick to our hard stop or give it to the tops of these body candles up here, still would have been able to stay in that trade with some reasonable risk management here and been able to have participated in this additional move here. So a couple of great examples of going risk on in the CADC and the GTHX, both not so much in PKE. Difference of 23 cents and 25 cents, extra 2 cents on the table. However, during the time that she was in the trade, this is where I always find some of this information interesting, like max profit. This is showing us the value. She was up the most during risk off time. So we can see that she booked 23 cents, getting out right here, but down here at this level, she was up 46 cents, right in this level right here. That's what the max profit is showing us, the most it was ever up in risk off mode. So still a double between what she took out from what it was up the most. Now let's just flip back over here to the first Holly, and we're going to see those two trades duplicated on the short side. CADC, GTHX as well, and then the loser of the long trade today. And of course, nothing really to write home about. Why did she get out of this? Well, it's showing up as a flat trade. It's showing up as a loser up here since it was a flat, but not that bad of a loser considering the day that it presented itself with the downside drag. So she flats CRTO, not a bad loser for a long on a day that was very, very red. And we can see today was what I like to call crimson most of the day, not just red, but the really, really dark stuff. Now let's take a peek at NEO, who basically just kind of was up a little bit, but pretty much just treaded water most of the day. And we can see here, pulled off a pretty decent trade in BJRI up here. Some really good price action there. Not a bad entry as far as entries go. Just right off the top there. Ended up making 80 cents in this nice little move. I mean, what a timely exit right here. And we can also see, boy, she milked that one for just about everything she could, because the most she was ever up was 85 cents, and she ended up booking 80 and then this thing regressed, and she would have only been up 40 cents on a risk on type of play. Other than that, just some losers here. 9 cents on risk off would have ended up being 25 cents. So good job on the risk management. She ends up making money on peg right here, 9 cents on a timed exit, and would have ended up turning into an 18-cent loser. So some really good operational and risk management going on NEO today. This wasn't the most active, but still producing a pretty significant winner in the form of BJRI. All right, so Steve, I noticed you're doing a good job there keeping up with the questions. Looks like they're all caught up. And that's pretty much it for Holly today. Any questions, go ahead and put them in, and I can address them real quick. But just a very conservative performance today from Holly on the short side, which is good, and some not so shabby totals here from a 3-trade count on Holly, Grail, and 2.0. And we'll see what happens tomorrow. All right, so keeping in mind the tone of the day, and keeping in mind our ebook and getting ready for when the market turns. We're getting a little bit of a taste of it right now, of course, depending on what happens tomorrow. You know, are we in the beginning phases of a downturn, or is this just normal type of activity in the summer, you know, where all of these tests of the lower support levels are going to be, you know, going to get a little frisky and punch through to some next down levels that everybody was kind of thinking wouldn't happen, and that's what we had today. But in any case, whether this is the beginning of a down market or whether it's just some gyrations, it's always good to familiarize yourself with these techniques, right? And the techniques that we're going to be looking at today on these short plays that I'm about to show you guys are right out of this book in my section. So without further ado here, let me find the right page. And then we're going to take a look here. So some really nice daily short setups coming out of the Turbo Breaks down version today. So we'll take a look at X, FCX, AMD, HQI, VEEV. And since I restarted my layout accidentally here, I'm going to have to find these windows, so bear with me real quick. I've got them. I just need to rearrange them real quick. All right. Let's go ahead and take a look at the first setup, which, let's see here. There we go. VEEV. All right. Right out of Turbo Breaks. What I've done here is I've isolated VEEV in its own stand alert configuration so that we can easily see the time. So I double clicked right here, arrows pointing right here, put the additional orange arrow out here for easy reference. And what do we have here? We've got the opposite of a bull flag. We've got a bear flag. We've got this initial down run and then this flattening area right here. So the seller takes a break. And of course, these are 5-minute intervals. So, you know, the seller lets off the gas there about 45 minutes in. We get this nice little flagging pattern, but there's still more to come. And then whoosh, as we get this break right here, what a beautiful short entry. So, you know, typically we're used to seeing this pattern to the upside. We have a bull flag, you know, plenty examples of that last week where they run up, go sideways for a little bit and take that extra leg up, except this is exactly flipped around. So we could have made a nice, clean, short entry anywhere in this candle right here. And what do we do to assess our risk when we see these nice little flags? Because this is really the beautiful part. Seller's been identified. Sellers and buyers become equal for a period of time. But guess what? That seller was not done yet. So as soon as this plane is broken, otherwise also known as a intraday range break, right? The high was up here, low's been established, it hovers over, and then poof, once it punches that low with volume, which is the nature of this window, we could see that on the 1-minute time frame it was exhibiting not just the 3 times minimum, but 4.5 times normal 1-minute volume. That's like the nice little push that we need. The more volume we have on our side, statistically speaking, the more likelihood the pattern is going to do something like we want it to. Now, duration and time of that move is always another matter based on several other things. But we had good volume in these guys all day, these stocks that I'm showing you here. So to assess our risk, getting short right here, we just look at the highest point in the prior 15 minutes, which would have been right here. So here's our risk area, here's our maximum reward area right here, and that's what we want to see. Small risk area, nice big fat reward area. And keep in mind, not something that's like making you pull your hair out either on a trade like this. It's just a nice sustained down move, right? So that was a really good one produced by the turbo brakes today. And even though I'm going to show you 4 or 5 examples, I mean, there were a lot more of these guys out there today, you know, way more than anybody could handle. So it was just about going through the ones and finding, are you catching it at the right time? This is proper timing for this trade. If you missed it, you're eating breakfast, a sandwich, talking on the phone, and say you missed it, and then you saw it hitting lows down here, that's not the animal that we're hunting. This guy is, right? This is too late. This is called chasing. Now, it still would have worked, but over the long term, the more and more you chase, the more and more it's going to degrade your results. All right, so that's a good example of a downside intraday range break. Let me get the next one here. I apologize, didn't mean to get my screen all messed up like this. So let's see here. All right, doing a pretty good job here at finding them quickly. All right, HQY. Gee, almost looks exactly the same, and that's because basically it is. Just little subtle differences here. So once again, seller, 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 all the way down to this level. Flag, seller takes a break. And the volume, it didn't find it right here, but no big deal because the train didn't leave the station quite yet. And then we got the volume confirmation as it came through here. Still a very intact pattern here. Highest level of the 15 minutes, not including the entry bar, right here. Now, also keep in mind, identifying these patterns while at the same time remembering what those compare count readings were, right? And after you make a couple of these and they start to work, well, then you're like, okay, let's just find the quality. You know, we're looking for them at the exact moments of the break, not too far after. Down here is too late, right? So it's all about timing, right? If timing was there on every trade, well, all we'd have to do is just max out our buying power every day. But it's about the timing. We're always going to have plenty of hits coming through, but is the picture right? Is that the animal that we're hunting? You know what it looks like, so therefore all you have to do is wait until the timing is right. And there were a lot of these guys today. So we got a nice tight risk area, and once again, to the close, we had a really nice reward area here and here. All right, so that's VEV, HQY. What do we got next here? How about a little USG? And by the way, these windows oh no, not USG. These windows, where this turbo brakes window is of course available in the channel 4 channel. All right, we did have A and B showing the same type of activity here. And once again, hey, looks very similar. We got the rundown, then we got the little flattened area. The lows were these guys right here. As soon as we come down here and crack this level, doing almost 6 times normal 1 minute volume, what do we get? We get a little sideways action and then an opportunity to take profit. Not quite as juicy as the other ones, but the pattern is still the same. So if we're getting short here, prior 15 minutes is right up here, nice and cozy. Not quite as big of a spread between risk and reward area here, or large area, but still significant nonetheless. And also, when you're in these types of patterns and you want a little expectation as to how far the thing might go, we can always just consult the daily, right? So if we're getting short at this opportunistic area right here, and we come over here and we can identify, well, you know, As soon as it got down here, it wicked out, and then it was right back up, you know, resting on these levels right here. You know, this chart's going to look very similar to a lot of other charts, but just looking at the daily while the trade is on to see what some of the more extreme pivots are or conservative pivot levels is going to help you when you're trying to figure out when to get out of the trade, because we've all been there and done that, where we get out for 20-30 cents. Next thing you know, it's down a point, and we're kind of not too happy. So just by consulting the daily, a lot of the times, that can assist us. All right, so we got a couple of more here. One momento. Okay, this one was a little bit later, right here. Here we go. Okay, FCX. Well, yeah, like I said, these patterns were all over the place, and it's nice when these happen because, you know, finding them in this type of quality with this frequency doesn't happen a lot. But it's good to show you that it is happening on a big down day like today, where the volume was significant, right? Just the exact opposite of the upside. So once again, here we have the entry point, 5, 10, 15 minutes. Once again, a little bit tighter than the rest, but still a decent spread between, or, you know, still a little bit larger area on the reward as the risk. And once again, these are trades that if you catch them right, you know, we're never getting anywhere near these stop areas here. And if we do get stopped out, it's a very low risk. So let's see, I think we got one more here. And of course, X is a stock that's been thrown around in the TI world many times and still is just a good little trading stock. And of course, Steve has nailed some really good trade of the weeks in the past on good old US Steel. So let's see here, where did this one come up? Right about here. Yeah, here's a little off here. But we see, come down to the level right here, we get that nice penetration again. 15-minute risk on this one would have been right up here. So we have, once again, nice tight risk, nice little area of reward, right? But as I said earlier, these patterns right here are right out of the ebook. So if you haven't taken the time to download that thing, please go over there and download it. And not only will you see a little, you know, a quarter of the book's going to be allocated to these type patterns, but you're also going to get to see the favorite type of bearish trades that Andy likes, Steve likes, and Sean likes. So you get 4 for the price of 1. And, you know, as Steve likes to say, chance favors the prepared mind. You'd much rather have this information and know what to do with it when the time comes, then all of a sudden you find yourself in a down market and you're like, I should have taken the time to learn about this beforehand. So do yourself a favor, download the book, consume it, remember those patterns, and you'll be a better trader for it. All right, so like I said earlier, those were a few, right? But there were tons and tons of those plays. And when we're talking about pattern recognition, you're going to be harder pressed to find a more simple pattern to engage in, whether you're new or whether you've been in the chair for 5, 10, 15, 20 years. Simply doesn't matter. Simple pattern, simple rule set. As Leonardo da Vinci says, simplicity is the ultimate sophistication. Makes a lot of sense in the trading world. All right, so in the past, we've been talking about taking the Holly plays and going through all the Holly plays at the end of the day and checking out the daily patterns to set price alerts. Well, of course, today we've got very limited plays to look at. However, you should continue to do this as the week progresses. Who knows what's going to be on the table tomorrow, Wednesday, Thursday, Friday. So never a bad idea to get into that habit. Do your Holly homework. Look at all 3 AIs. Of course, we're kind of limited today. If we do start looking through these guys, we might notice some interesting, you know, types of setups. We can see BJRI today. It did take a swoon down, but recovered pretty well. Still, you know, not looking like an atrocious bar in the in as far as the daily pattern goes, but looking like this little guy is at all-time highs, and he might just decide he wants to go sideways here, you know, between these levels right here, as this becomes future support potentially. So definitely might be one to keep an eye on. Of course, it's going to ebb and flow with the rest of the restaurants in that sector. So there's just not a whole lot that I identified earlier that looked real juicy. Usually like to see them a lot tighter up at the tops, and then, you know, not hanging out in space like this guy's doing. However, this wouldn't have been a bad short at this level right here, because, you know, we're so used to seeing the upside breaks. Well, some are breaking to the downside, and we're starting to see more and more of these types of trades materialize. So I would assume that as the market does continue to break down, whenever that might be, mind you, I'm not saying that that's happening this week, we'll start to see more and more of these types of plays to the downside. Once again, typically the opposite of the exact chart that we were just looking at to the downside, we've got this guy recently having broken out. Now, how many days run is it going to go on? Is this it? Is it going to retrace back here? But these are ones, no matter how many days we go up, if the market continues to be soft, and instead of buying the breakouts, maybe we want to start setting alerts to buy pullbacks, you know, alerts from above. So just a simple example of that would be, well, market's kind of schizophrenic right now, so instead of chasing tops, I wanted to set that pullback alert. We said the low of that candle would be 53.40, so we could say 53.45. I want to check it out when that level gets there, but we would have to say falls to for long, right? And then we just make a note, Holly daily, and save that alert. Now, flopping back over to the other two, which were pretty much the same except for one long. The CADC is so, well, we can see what it's doing here. Don't really want to fiddle with setting a price alert on CADC on a daily because of the action that we've been having here. Wow, look at those wicks. GTHX, this one could get interesting. You know, perhaps it does the little sideways dance here if it can get back up in here. What did that thing close at today? Right down here. So closing below that line there. You know, maybe it pops back up, maybe it hugs this line. But I definitely watch this one as it moves, maybe sideways. Who knows? It is a a biotech, I believe. Anytime I see therapeutics in there, yeah, I could get back up here and test these levels. So all you'd have to do is set a price alert up here, create that price alert, title it appropriately, Holly Daily. You can't go wrong with doing this. And of course, CRTO, which was the only long today, as it tries to, this is a nice little area that it got up to here, but looks like it's lining up perfectly with this little area back here. So anyway, not a whole lot of examples to look at today, which is strange, seeing Holly with only this many trades, but with a sparse trade count and those types of results, hey, I'll take it like that each and every day. The fewer the trades with the most alpha, I'm always a fan of that. All right. I think that gets us through most everything that I had planned today. Steve, anything that you care to comment on, and maybe we could open up for a couple of charts?
No, I mean, I was just hitting some of the good questions there in the questions panel, and that was about it.
Yeah. Okay. Well, looks like we're all caught up on the questions panel. So let's see. We get about 5 minutes here. So how about we take a couple of charts, Steve? Up for that?
All right, sure.
All right. Anybody have any daily charts you'd like us to take a look at? First come, first serve. Pop them on up there. All right. We got an FE. And that, there we go. Got to back out a little bit. It's like we're just getting ready to maybe test these levels right here, Steve.
Nice, definitely a nice 52-week breakout for sure. Short float isn't that significant, but it looks like it might run right smack into resistance about 36.60, going back to August of 16 actually.
Right.
But that's a nice breakout from daily congestion for sure. That was about the tightest congestion you could have. It was actually kind of trending up as it was trying to go sideways, but not a bad call there. I don't know if you're already in it or looking to enter. It makes it kind of hard to enter it now. It seems like it's had its moment, and then not much far above it is going to be some big resistance going back to August 16.
Yeah, and that little guy, I mean, he definitely bucked the trend today. Relative volume 2.36 and doing nothing but go up today. Of course, sometimes those stocks like to run contrary to the market as well. All right, we got a couple more popping in here. How about EGY?
EGY Energy. Okay, Energy was having a good week last week. Well, something came alive. I don't know what it was that brought the stock out of the dollar doldrums. But the last 2 days is kind of threatening. I mean, it was looking great 5 days ago, but now it's starting to look like it wants to roll back over. That swing exit area that we have at 194 highlights a level of support that might be headed for. Otherwise, I don't see much at this point.
Very good. Okay, how about the GAIA? Another little high flyer, it looks like. Yeah. It's just been marching straight up since these levels here. And then got out of this level here. Well, I don't know. It's just
nice trend.
Yeah.
But it's really, the train's really left that station. I think maybe, you know, a pullback to 2050 around those levels could be interesting.
Yeah.
It definitely had great relative strength today. Looks like it's got a big short float that could be helping it move higher.
Yep.
You know, on these types of things, if you jump in when the train left the station like this, you've just got to be prepared for the big breather, the big pullback, and you could cut it loose quickly and try and ride it. But just be aware that, you know, at some point this thing's ready for a nice pullback.
Yeah, it'll take the elevator at some point. All right, cool. Ooh, speaking of elevator, that was a heck of an elevator.
Wow. Sure was. Yeah, that's a great example of stair steps up, elevator down. Looks like it breached that smart swing stop, and the smart stop and the swing stop. Swing stop being the lower of the two. You know, after a big red candle like that, it's probably going to take a couple days to maybe wash out even more of the weak hands. But if it wants to dig in and create some sort of a base around 25 level, you know, so be it. Looking at the short float, also a big one, but you know, everything got taken to the woodshed today if it wasn't nailed down properly. But you could see the virtues of not buying that fourth green candle on the daily chart there because of what eventually did happen. So you're better off looking for entries down here. I think maybe ideally a second test of today's low, and then if that failed test doesn't break down and the buyers step back in, well, that might be a good entry. Definitely could consider that. But that, okay, so hold on a second here. As I read it, it says, what was the good time to short cool intraday? So it's not so much he's asking about it. I can tell you, and I know exactly what Jamie's looking at. It's right there about 34.30. We sold off this morning, and we had a little, exactly that top level. He's highlighting it already. That would have been your place to short, okay?
Right. Is this a little, you know, looks just like what we were talking about earlier. You got the nice little flat area, and then boom, assuming the volume was high at this level, which it kind of looks like it was, and then talk about a low risk area. Wow. I mean, ideal, and then a huge reward area all the way down here.
Yeah, we agree there for sure.
So yeah, that would have been a really beautiful short sell right there. Let's see. I missed the question there. Frank was asking, what's the difference between the turbo down family and turbo down family no support?
Oh, yes.
Okay, well, Frank, turbo down no support, just like this one is no resistance, meaning all the stocks coming through here. If we find a nice, you know, cuddly pattern to get us in on the intraday, which I certainly do not see that on cost today, but it's going to be at all-time highs, right? So the no support is going to be the exact opposite of this. It's going to be showing you stocks that are at all-time lows, and we're looking for the same intraday pattern because they're hanging out there in space. There's nothing to support them, which means you can get some good downside moves. However, a lot of the ones that are coming through that ticker right now are very thin and not so liquid. But keep in mind, that window will really come into play when the market really does turn. It will spit out some pretty good ones every once in a while, but not near as many as the upside with no resistance. So I hope that makes sense. All right, and I think
we're caught up.
Yeah, I think we're caught up, and I think that's about all the time we have for charts. So for those of you who are not subscribers, or maybe you're thinking about upgrading to premium, now we're going to have Scott come in and tell you guys about the new coupon code and a way to save some money on an upgrade or a new subscription.
Yeah, thank you. Let's pull up the presentation there. We do have a podcast that comes out every week, just about, and make sure you get that. Search for Trade Ideas Podcast in whatever app you use to listen to your podcast with. Just add us as a subscription. You'll get the most recent episode, and you'll be ready for next Fridays. You can also explore the archives. There's some real good stuff in there, so don't ignore the older ones, the catalog titles. Also, we have a code that'll let you save 15% off your first month or year of any Trade Ideas subscription. Holly Summer, all caps, just like you see it. That'll also let you save the same amount if you're upgrading from standard to premium. You can just log in on the home page in the upper right when you get to your account management section there after you're logged in. Select the Change My Subscription navigation link on the right and use the code. Thanks, everyone. We'll have a recording up of this later on tonight or tomorrow. You get an email reminder tomorrow about where that playlist is located. You can follow Jamie Hodge on Twitter at QuantBots. Steve Gomez is at Today Trader. We've got other handles like at Trade Ideas and at Trade Ideas 1. Facebook.com/Trade Ideas Pro is the location on Facebook to like. When you like our page on Facebook, you can share all our content with your friends. That'll make us happy. Any questions, email info@trade-ideas.com. Thanks, everyone. Thank you, Jamie. Thank you, Steve.
Thank you, Scott. Steve, as always.
Sounds good.
Thanks for co-piloting, and thank you, everybody, for popping in, and we'll see all you guys tomorrow. Bye-bye.
Later, everyone.